What's up, everybody? Hopefully you guys are doing great, and want us to talk about what happened the previous week, and try to talk about the weekly profile and actually how I usually approach it, and how I can be able to get trading opportunities, and how I can be able to anticipate from this level I'm expecting a reversal or a continuation to happen. So as you can see from my screen, we have the lines which divide or which categorize the different days of the week. We have Monday, Tuesday to Friday, and want us, before talk much more from the day from this 1 hour, want us to go to the weekly time frame, because that's where everything starts. So from the weekly time frame, actually what I tend to do is try to identify my direction, try to identify also my context area. So from what levels am I expecting a reversal going higher, maybe a drop for the week to create this lower week, right? I usually anticipate to see price dropping lower to create the lower week, then an expansion higher towards my targets. So this week, or what happened this week, is try to observe for the previous candle or the previous week's candle, and try to anticipate what can be my direction, and also what can be my context area. First of all, I usually start with my targets, and what if I'm bullish, what can I target? I'm targeting this previous week's high, and also what if the market takes the previous week's high on the first day of the week. I usually also try to identify the next target or the next PDRE that the market can rally to. And for this situation, after this high, we had this higher high, but you can observe this a long week. And whenever we have a long week like this, we usually use the midpoint as a target, and this midpoint is what I have referred to this as the weekly week consequent encroachment. The midpoint is a consequent encroachment is another name we call the midpoint, so don't be bothered about the CE. CE refers to the consequent encroachment, which means the midpoint of a week. So instead of me targeting higher, my first target was the previous week's high, then my second target will be that weekly high. After identify that, what next do I need to find? Now I have my direction if I'm bullish, and what makes me to be bullish, or what makes me to be bearish. I try to observe the structure, what the market has been doing. So from these we have kind of been consolidating, though with that long weeks, and market respecting these swing highs, or also these fair value gaps over here. The market was to use this fair value gap, and this fair value gap was to do its job, because a fair value gap always acts as a catapult. So whenever you have your stone in the catapult, you have some force, then you let the stone go. That's what the fair value gap also does. So price stung into that, then its job was to drop lower with force, because the catapult always lets the stone with force. So of this fair value gap, we needed to see displacement below these lows, because that's when this fair value gap would have done its job. But what we saw is we had consolidations, we had liquidity sweeps being formed, we had swing lows being formed, and then as of the previous week, we had a bullish engulfing candles. After identifying that price had formed that bullish engulfing candle, because we had a sweep of the previous candle's low, what qualifies a bullish engulfing candle, we have a sweep of the previous week's low, and we have the candle closing above the opening and the closing price of the previous the previous candle. Sorry, we have the candle closing above the opening and the closing of the previous video. That qualifies a candle to be an engulfing candle. So after identifying that engulfing candle, I have my first sign that the market is likely to go higher, right? And what I will be targeting, previous week's high and the weekly week consequent encroachment. Now what I need to identify is my context area, and my context area, whenever I have engulfing candle, I divide that engulfing candle into 4 equal parts. You can see we have these 4 equal parts, because I have divided the engulfing candle into 4 quadrants, and the levels I'm watching is the 0.25 level and also the 0.5 level. For this situation, the wick rallied deeper past the 0.5 level, and for that reason I was actually I drop onto the lower time frame to identify what happened, and we will get to see what happened. So of these 2 levels, we passed through the 0.5, also the 0.5, then the market displays, and you can see the targets were met. Now, why do I usually anticipate the drop, or the drop into the context area, then repricing higher? Always, if you see any candle, you will have to identify we have the upper wick and the lower wick. So for any candle that prints, I usually want to see either the lower wick or the upper wick being formed, so that I may get involved in the displacement of that candle. So after identifying the 0.25 level and also the 0.5, which were my context area from the weekly time frame, I need to drop to the daily time frame so that I may get to refine, right? And from the weekly, what I usually refine is my context area. If what do we have that is in close proximity to that 0.25 level, also the 0.5 level that could cause the market to rally higher. So if I can get back my key, that then go straight to the daily time frame, what you can identify is we had that fair value gap that was a daily fair value gap overlapping with these 0.5 level. So this to me was a key point, or a key reversal point, from which I wanted to see the market staying into, then displace higher. But what we saw on Monday is we stung into that 0.5 level, we stung also into that fair value gap, we rallied deeper, cleared even the Thursday's lows, then we rejected higher. With that rejection now, and also as we know, the wicks do the damage but the candles tell the story. With this scenario, what happened? The wick did the damage, seeking liquidities, tapping into the key context areas that I was watching, the daily fair value gap, the 0.5 level of the weekly engulfing candle. After having that sting and with that nice rejection, now I wanted to see displacement to my first target, and then maybe off that we could displace to the weekly wick consequent encroachment, which later on, as you can see, did happen. And now, after identifying that Monday has done the thing that I wanted to see, or Monday had already played or created the lower wick of the weekly candle, now want us to drop to the 1 hour time frame and try to see how the weekly profile printed out. So inside the key level, what you can see is on Monday during the London session, the market dropped into that fair value gap, meaning the fair value gap is now invalid because it has already been traded into, right? The fair value gaps are always traded into once. If a fair value gap has been traded into once, that fair value gap cannot be used to push prices lower. What pushes prices lower for this situation? Because the fair value gap had been utilized and price pushed higher, swept these liquidities resting above this high, then price dropped lower back into that fair value gap. But what we saw is price swept that London lows, then we started displacing nicely higher, and once we closed above this swing high, then we formed that bullish breaker that was traded back into, and you can see from the 1 hour time frame, we have those fair value gaps from the 1 hour that were left open, were traded into. We had nice consolidation and the market started displacing higher. And what you can see is as of Tuesday, we were in close proximity to our previous week's high, which was our first target, but price dropped lower, then we consolidated. So as I was saying, is we were in close proximity to the previous week's high. So sometimes we might be having maybe our targets above a major liquidity pool, or what we want to see the market sting into, but the market comes in close proximity, then reverses, right? Maybe if we could have moved our stops, or our stops were within these imbalances, we could be taken out, then we can see the market rallying higher. So sometimes it happens, but also we can also try to see how we can also try to find trades within this, because in this area, if I was to be waiting, I usually trade the 9 a.m. candle. So this was the candle I could have been watching, wanted to see a reaction of this fair value gap, the 1 hour fair value gap. But what happened is we had that sting into these fair value gaps, but no sign of any bullish as this candle was printing. So we called it off for this day. We had a consolidation, then later on, as of Wednesday, our TP was met. Price immediately sweeping that high, we had another drop into these fair value gaps. Then we consolidated as we were pushing higher. Then during the NFP week, what we saw is a drop, and then we saw that rally. And one thing I want us to notice is how timing is a major part in trading, and also how to avoid consolidating conditions, and also how to get involved at the right time at also key levels. So as of Wednesday, what has been happening is we saw Asia and London consolidating, and during the New York session, we saw prices pushing below the London lows, which is a major liquidity pool, of which we can expect reversals. And we swept those lows, then we started displacing higher, and the first target was later on met, a drop again during the Asia session, which we should be avoiding trading. We consolidated, and also the London, we consolidated, then we pushed higher, swept the Wednesday's high during Thursday, which is a major liquidity pool. We dropped lower, consolidated on Friday. Asia and also London consolidated, but during the NFP, price pushed lower, swept the London and the Asia lows, then our price pushed higher to the week consequent encroachment. Notice how the major liquidity pools are being swept, and then price utilizes them as a key reference point, of which then prices pushes higher, and immediately we take a key level, we try to reverse. So it's always good to understand when to trade, and also ensure that you have your direction, you have your context area, because my context area was that daily fair value gap with my first target, previous week's high, that was met, and the week consequent encroachment that was met. So my strategy is always having a direction, number one, which I usually use the engulfing bars, usually use also the power of 3, accumulation, manipulation, distribution, which always happens. You can see we have accumulation, then we have the manipulation, which a good example is the NFP, did manipulation, then we did displace. Also on this Wednesday, we accumulated. On Wednesday, we accumulated during the London, price during the New York manipulated, then we distributed, and also having my direction intact. So also the number one thing is understanding that it's always time then price, because you can see when price is determined to push or to rally in a given direction. So that's how this week candle printed, and I think what we can overly learn is know when to trade, have your direction, and there's just align with what you think price is gonna be doing, and stick to it consistently enough. You'll get to maybe reap the reward as you keep on pushing. So there is it for this video. Hoping to see you in the next.